Viewers at home, you are welcome to the part 2 of my presentation on sources of government revenue. In this part 2, I will examine the preparation of federal government accounts or consolidated revenue funds. So I will consider the sources of revenue payable into the consolidated revenue funds and the charges to consolidated revenue funds. If this is your first time of coming across my channel, or if you have not subscribed in the past, please click on the red subscribe button and turn on the notification bell icon so that you will be able to receive a notification message each time I drop a new video. If you are a returning subscriber, I say thank you and God bless you. Consolidated revenue funds or federal government account. We either call it federal government account or you call it consolidated revenue funds account. Consolidated revenue funds was established by section 80 of the Constitution of Federal Republic of Nigeria. It was established by section 80 of the Constitution of Federal Republic of Nigeria. Consolidated revenue funds account is an account into which shall be paid all other revenue of the federal government. The account into which shall be paid all revenue of the federal government, with the exception of those revenue items which are specifically designated to other funds. It is an account into which shall be paid all other revenue of the federal government, apart from those revenue that goes into the federation account, with the exception of those revenue items which are specifically designated to other funds. So examples of revenue payable into the CRF, that is Consolidated Revenue Funds account, are the payee of the officers of the armed forces, the payee of the officers of the armed forces, police personnel, foreign affairs and residents of the Federal Capital Territory, Abuja. So sources of revenue payable to CRF. Sources of revenue payable into CRF. CRF means Consolidated Revenue Funds. Consolidated Revenue Funds. Sources of revenue payable into CRF. The revenue payable into CRF shall be grouped into head number 6, head 6 to head number 17. Revenue payable into CRF are grouped into head 6 and to head 17. So I want to start with head number 6. Head number 6. Head number 6 is direct allocation. Direct allocation. Direct allocation. Direct allocation from the federation accounts at the prevailing rate will fall under this head. Direct allocation, that is, by the time you have prepared your federation account, the federation account, the CRS share of the federation account of 52.68%, or the rate which may change from time to time. So that is what we mean by direct allocation. That is, direct allocation from the federation account at the prevailing rate. I use the word prevailing rate because that rate is subject to change. So that means it might change from time to time. So whatever rate you have, so the share of the federation account will fall in head number 6. Head number 7 is direct taxes. Head number 7. That is direct taxes. Direct taxes fall under this group. Direct taxes, this include payee of the armed forces. Payee of the armed forces. We have payee of the armed forces, payee of the police personnel, of the police, personnel. Then payee of the foreign service officers, payee of the foreign service officers, payee of the foreign service officers. Then we also have the payee of the resident of Federal Capital Territory, payee of the resident of Federal Capital Territory, Abuja. So that will fall under this head, Abuja. So these are revenue that fall in head number 7. Then we have head number 8, revenue head number 8. Revenue head 8. Revenue head 8, we have license and internal revenue. License or licenses and internal revenue falls under this group. License and internal revenue. These are revenue realized from the issue of licenses. Revenue realized from the issue of the licenses. Examples are arms and ammunition license fees. Arms and ammunition. Ammunition license fee. Arm and ammunition license fees. Then we also have goldsmith license fees. Goldsmith license fees. License fees. Then we also have gold dealer license fees. Gold dealers license fees. License fees. This falls under head number 8. Head number 8. Revenue head number 9. Head 9. That is mining. 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 This include mining fields, royalties on gold, tin, iron ore, and coal mines. Mining revenue from mining include mining fields, royalty on gold, royalty on gold. Then we also have tin, royalty on tin. Then we have iron ore. Then we also have coal mines. Coal mines. These are revenue that fall under this revenue head. Then we also have head number 10. Head number 10. Head number 10, that is fees. These are fees received on services rendered by government officials. Fees received for services rendered by government officials. Examples are court fees. Court fees. Then we also have court fines, court fines. We also have medical fees. This fall under head number 10. Then head 11. Head number 11. Head 11, that is earnings and sales. Head 11 is earnings and sales. Earnings and sales fall under this. So what do you mean by earnings and sales? Earnings and sales are revenue derived from the use and subsequent disposal of government properties. Revenue generated or derived from the use and subsequent disposal of government properties. E.g., revenue under this head include sales of stores, sales of store items. Then we have publications and stamps. Publications and stamps. Revenue realized from publications and stamps. Publications and stamps. Commissions on money order and poundage on postal orders. Commission on money order. Commission on money order. Then we also have poundage on postal orders. Poundage on postal order. This fall under revenue head 11, which is earnings and sales. Number 7, I want to consider revenue head 11. Head 12. Revenue head 12. Head number 12. Head number 12 is rent of government property. Rent of government property. That is head number 12. Rent of government property. These are income from the rent of government quarters, land and buildings, etc. Income generated from the rent of government quarters, land and building, and etc. are said to be revenue. They fall under revenue head number 12, that is rent of government property. I want to examine head number 13. Revenue head number 13, that is interest and repayment general. Interest and repayment general. Interest and repayment general. These are interest and repayment of loans granted to individual by government, corporation, and government companies. They are interest and repayment of loans granted to individual by government, corporations, and government companies. E.g., repayment of motor vehicles loans. Repayment. Example of this, we have repayment of motor vehicle loan. Repayment of motor vehicle loan is an example of this. Then this is revenue head number 13. This is head 13. Head 13. Revenue head number 13. I told you that is all about interest and repayment general. Then number 9. I want to look at revenue head number 14. Revenue head 14 is interest and repayment state. Interest and repayment state. Interest and repayment, state. These are the repayments of interest and loan granted to the state government. The repayment of interest and loans granted to the state government falls under this head 14. That is one of the sources of revenue that go into the consolidated revenue funds. Number 10, I want to look at head number 15. Head 15. Head 15 is armed forces. Armed forces. Armed forces are the sale, revenue under this head are the revenue from the sale of armed forces properties. Revenue under this head, head 15, are the revenue from the sale of armed forces properties, such as the revenue from sales of old vehicles and the revenue from sales of stores items. Revenue from the sales of old vehicles and revenue from the sales of the stores items falls under this category. Number 11, we have head number 16. Revenue head 16. That is reimbursements. Reimbursements. These are the refunds for services rendered. Refunds for services rendered. Maybe there are overpayments. Maybe when you pay for audit fees and auditors was overpaid, the auditor refunds that overpayments. That will fall under this. That is reimbursement. That is, they are refunds for services rendered, e.g. reimbursements of audit fees, reimbursement of audit fees, and refunds of overpayment made to government workers. Examples are reimbursement of audit fees and refunds of overpayment made to government workers. That will fall in head number 16. The last one is revenue head number 17. Revenue head number 17. Head 17, that is miscellaneous. Miscellaneous. So, these are incomes from other sources of revenue, apart from those listed in head 6 to 16. Revenue from other sources of income, apart from revenue from head number 6 to head number 16 listed above, will fall in this category, that is miscellaneous income. So those are the sources of revenue that goes into the CRF. And now I want to examine these charges to the CRF. Charges to CRF. Number 1 charges I'm going to examine is recurrent expenditure. Yes. Recurrent expenditure. Yes. In the approved estimate. Estimates. Those expenditure incur on day-to-day basis. Expenditure incur regularly in performance of the official duty or staff duty. In the course of performing their duties, their official duty. So those expenditure incurred are the recurrent expenditure. They are incurred daily on a daily basis. Examples of these are personnel cost, personnel cost. Then we also have overhead cost, and we also have servicing of national debts, servicing of national debt. These are charges against CRF. By charges, we mean the withdrawals. Charges to CRF are those deductions or withdrawals that will be made against CRF. The deductions or withdrawals that will be made from CRF. That means you are going to deduct this from CRF. That is why we call them charges to CRF. The second group, I'm still on charges to CRF. The second group of items that will be charged against CRF are pension and gratuity. Pension and gratuity. Pension and gratuity are the entitlement of both statutory and non-statutory officers. The entitlement of both statutory and non-statutory officers, it's including members of the armed forces. Entitlement of both statutory and non-statutory officers, including members of the armed forces. Number 3 category, we have salaries and consolidated allowances of statutory officers. Number 3, we have salaries and consolidated allowances of statutory officers. Salaries and consolidated allowances of statutory officers. These are the expenditure chargeable to the CRF irrespective of budget approval. Expenditure chargeable to CRF, that is Consolidated Revenue Funds, irrespective of budget approval. Statutory officers include, by statutory officers include, number 1, we have Auditor General for the Federation. Auditor General for the Federation. Auditor General for the Federation. Number 2, President and Justices of the Federal High Court. President and Justices of the Federal High Court. President and Justices, that is Justice of the Federal High Court. Number 3, we have the Nigerian law, we have the Chief Justice and Justices of Supreme Court. The Chief Justice and Justices of the Supreme Court. Then we also have the Chief Judge and Judges of Federal High Court. The Chief Judge and Judges of Federal High Court. Then we also have commissioners of the following bodies. Commissioners of the following bodies. Commissioners of the following bodies among the statutory officers. We have the Police Service Commission, Police Service Commission, we also have Nigeria Law Reform Commission, Nigeria Law Reform Commission. Then we also have Public Complaints Commission, Public Complaint Commission. We also have the Public Service Commission, Public Service Commission. Then we have Independent National Electoral Commission, INEC. Independent National Electoral Commission. So the commissioner of these commissions, so they are part of the supreme statutory officers. Statutory officer. I've told you that statutory officers include the Auditor General for the Federation, the President and Justices of the Federal High Court, Chief Justice and Justices of the Supreme Court, Chief Judge and Judges of Federal High Court. We have Commissioner of the following bodies: Commissioner of Police Service Commission, Commissioner of Nigeria Law Reform Commission, Commissioner of Public Complaints Commission, Commissioner of Public Service Commission, Commissioner of Independent National Electoral Commissions, INEC. So all these are statutory officers. The salaries and consolidated allowances of these statutory officers, I've told you that there will be charges against CRF. Number 4, charges to CRF I'm going to examine is what I'm going to term appropriation. Appropriation. So that is, appropriation is form of distribution from CRF to other funds. Distribution from the CRF to other funds. That is transfer, e.g. transfer from CRF to development funds. Transfer to development. Transfer to development funds. Fund. Then we also have transfer to contingency fund. Transfer to contingency fund. These are what I regard as an appropriation items. So all these are charges to CRF. Having considered those charges that we made to consolidated revenue funds, I therefore want to consider work example. This question is obtained from Ezikan November 2014 Public Sector Accounting and Finance, number 1 question, compulsory question. Now, you were told a border state is one of the 30 states in Olakoma. A border state is one of the 30 states in Olakoma Federation. The federation has a population of 120 million people. The federation has a population of 120 million people with 700 local government councils and a land mass of 300,000 square kilometers. a border state has a population of 12 million, 25 local government councils, and landmass of 300 square kilometers. The following transactions took place in the office of the Accountant General of Olakoma Federation during the year ended 31st December 22X. The first item, all transactions are in million. The first item is crude oil sale, 350,000. Domestic oil receipts, 445,000. Miscellaneous oil receipts, that is 105,000. Royalty on crude oil, 101,000. Royalty on gas, 95,000. Then we also have rentals on oil feed, 87,000. Gas flood penalty, 77,000. Then we also have petroleum profit tax of 650,000. Company's income tax, 500,000. Other non-oil taxes, 225,000. Import duties, 125,000. Import duties, 255,000. Export duties is 125,000. Excise duties, 320,000. We also have custom penalty charge, 115,000. Then we also have custom fees account, 120,000. Common external tariff levy, 100,000. Then we have court fees of 30,000. Then we have payee of armed forces, 55,000. 7% port levy, that is 25,000. Then we also have value added tax, VAT, 700,000. Number additional information 1. The Olakoma Customs Service is entitled to 7% cost of collection on all revenues collected, while the Federal Inland Revenue Service is entitled to 4% of non-oil revenue. That is note 1. Note 2. The sharing formula for the Federation account and VAT is as follows. You have the Federation account and we have VAT. We have federal government, 52.68%, and VAT is 15%. State government, Federation account, 26.72%, and VAT is of 50%. Then local government, Federation account, 20.60%, and VAT of 35%. Then note 3. 13% derivation. 13% derivation is paid to oil producing states and is based on oil and gas related income. Note 4. The sharing ratio in 2 above is based on the following criteria. We have the state and local government. On equity basis, the state is 40% and the local government is 40%. Population basis, state is 30% and the local government is 30%. Land mass, state is 20% and the local government is 20%. Then we have internally generated revenue effort, and that is 10% for both state and local government each. Then note 5. Note 5, we have the total internally generated. The total internally generated revenue effort of the 30 states and 700 local government councils amounted to 500 billion naira and 300 billion naira respectively. Note 6. The total internally generated revenue effort of the Ebola state and 25 local governments amounted to 50 billion naira and 20 billion naira respectively. Ebola state is not one of the oil producing states. Note 7. All revenue due to all local governments in each state is paid to the state joint local government account. The account is entitled to 10% of the internally generated revenue IGR of the state required. A. Calculate number 1 Olakoma Customs Service cost of collection. 2. The Federal Inland Revenue Service cost of collection. 3. 30% derivation paid to oil producing states. B. Calculate the amount to be paid to be credited to 1. Consolidated Revenue Fund of Olakoma Federal Government. 2. Ebola State Consolidated Revenue Funds account. 3. State Joint Government account. Solution. In the requirement A1, you are to calculate Olakoma Customs Service cost of collection. Olakoma Customs Service cost of collection. So that is what we want to calculate. Then you go back to note 1. In note 1 of the question, you were told that Olakoma Customs Service is entitled to 7% cost of collection. Remember, you want to calculate the Olakoma Customs Service cost of collection. So, and you were told that the Customs Service is entitled to 7% cost of collection on all revenues collected. On all revenue collected. That means you will need to calculate the revenue collected by the Customs Service. Revenue collected by the custom. Remember, custom, they used to stay at the borders. So the revenue from the imported and exported goods, that is revenue like import duties, export duties, all those revenue, excise duties, those duties, custom penalties, custom fees, tariff levy. So those revenue collected by custom, so we fall under this category. You are going to you calculate the total of the revenue collected by the custom at the port. Revenue collected by the custom, then you calculate 7% of it. That will give you the cost of revenue collection. So now solution. Solution. Olakoma Custom Service cost of revenue collection. I've told you that you are going to calculate the total of the revenue collected by the customs official. Then you now calculate 7% of it. Since you were told in note 1 that the 7% cost of collection will be paid to the customs service. So now let's go through the revenue items and identify those revenue which were collected by the custom officials. Crude oil is not collected by custom. Domestic oil not by custom. Miscellaneous oil receipts not custom. Royalty on crude oil not collected by custom. Royalty on gas is not collected by custom. Rentals on oil field is not collected by custom. Gas flood penalty not collected by the custom. Petroleum profit tax is not collected by the custom. Then company's income tax is not collected by custom. Other non-oil taxes not collected by custom. Then we have items. So I said other non-oil taxes are not collected by custom, but import duties will be collected by custom. Export duties will be collected by custom. Excise duties will be collected by customs. Custom penalty charge is the revenue collected by custom. Custom fees account is revenue by custom. Common external tariff levy is a revenue collected by the custom officials. Court fees, not custom. So this revenue I've stated are revenue collected by custom. We are going to write them out. So since they were collected by custom, so now we have import duties, import duties of 255,000 to 55,000. Then we also have export duties, and that amounted to 125,000. Then we have excise duties, and that amounted to 320,000. Then we have custom penalty charge, custom penalty charge, and that amounted to 115,000. Then we also have custom fees account, and that amounted to 120,000. 120,000. Then we also have common external tariff levy, common external tariff levy, common external tariff levy, and that amounted to 100,000. All these are the revenues collected by the customs. So now I've studied them. No, all these were identified from the question. I've told you that those items I've studied. So you now sum it up. What is the total revenue collected by the custom? So when you sum it up, so you have 255,000 plus 125,000 plus 320,000 plus 115,000 plus 100,000 plus 120,000. The total will be the total of that. When you sum it up, everything is totaled 1,035,000. 1,035,000. Remember, this revenue we've identified as the revenue from federation account. The first in federation account revenue head. So federation account revenue. Federation account revenue. So that means this revenue collected by custom identified above will all go into the federation account. So now if you go through the question, there are further revenue collected by custom. Pay of armed forces is not collected by custom. Pay of armed forces is not collected by custom. 7% port levy. The port levy will be collected by the custom. Value tax is not being collected by custom. That means this 25,000. 7% port levy. Now let's include that as part of the revenue collected by the custom. 7% port levy. 7% port levy. and that amounted to 25,000. When you add it to 1,035,000 you have above, the total will be 1,060,000. That is the total revenue collected by the custom, by Olakoma custom. Now, you were told in the note 1 that 7%, you were told in note 1, Olakoma custom service is entitled to 7% cost of collection on all revenue collected. That means the custom will be entitled to 7% cost of collection. So now we calculate 7% to get the cost of collection. Cost of collection, that is by the custom, Olakoma custom, the cost of revenue collection. That is Federation account head, revenue head, Federation account, revenue head. The cost of collection of that is 7% of 1,035,000. So I added M because we have hid million, because we have million at the top. That is why I just put M. So now 7% of 1,035,000. Then that will give us 7% of 1,035,000. That is 72,450,000. 72,450. 72,450. This cost of revenue collection will also be charged against the Federation account, since the custom incurred that in collecting the Federation account revenue. So we also have the port levy. No, port levy is a revenue that falls in CRF. So now CRF, that is revenue head, 7% port levy, 7% port levy. You know, the cost of collection is 7% as given in note 1 times the 25,000. I'm adding M because of the M we have hid above, because all transactions are in million. So 7% of 25,000 will give us 1,750. 1,750. If you add the 1,750 to 72,450, then you have 74,200. This is the total cost of revenue collection of the Olakoma custom service. Now, that is the first requirement. That is A1. That is the requirement A1. A1. Now, requirement A2. Requirement A2. You were told to calculate the Federal Inland Revenue Service cost of collection. Cost of collection. Now let's go back through to that note 1. The Federal Inland Revenue Service cost of collection. While the Federal Inland Revenue Service is entitled to 4%, that means the cost of collection of Federal Inland Revenue Service revenue is 4%. 4% of non-oil revenue. 4% of non-oil revenue. Now, you want to calculate the Federal Inland Revenue Service cost of revenue collection. That is the requirement of A2. So, Federal A2, Federal Inland Revenue Service cost of revenue collection. Federal Inland Revenue Service cost of revenue collection. All figures are in million. Cost of revenue collection. Remember from note 1, you were told that the federal inland revenue cost of collection is 4% of non-oil revenue. Then you go back to the question to identify non-oil revenue. Crude oil sale is an oil revenue. Domestic oil receipts is an oil revenue. Miscellaneous oil receipts is an oil revenue. Royalties on crude oil, that is oil revenue. Royalty on gas is an oil revenue. Rentals on oil field is an oil revenue. Gas flood penalty is an oil revenue. Petroleum profit tax, that is an oil revenue. Then company's income tax, this is not an oil revenue. Company's income tax is not an oil revenue. That is why I identify that here. Then we have other non-oil revenue. This is not an oil revenue. So then other non-oil revenue. Then the court fees is not an oil revenue, but it will not be included in the revenue collected by Federal Inland Revenue Service because it is the fees charged by the court. So it's not collected by the Federal Inland Revenue Service. So now you have the revenue we have identified are company income tax of 500,000, company's income tax, and that is given to be 500,000. Then we also have the other non-oil taxes. Other non-oil taxes. Other non-oil taxes is given to be 225,000. 225,000. When you add it up, you have 725,000. These two revenue we have identified also fall in Federation Account Revenue Head. Federation Account Revenue Head. Then you also go through the details. They will have some revenues here. Pay of armed forces is not an oil revenue. The pay of armed forces is not collected by the Federal Inland Revenue Service. So then 7% port levy is not collected. It's not an oil revenue, but it's not collected by Federal Inland Revenue. The value-added tax will be collected by the Federal Inland Revenue Service, so that will be included. So let's have value-added tax. Value-added tax. Value-added tax, and that is 700,000. When you sum it up, you have it to be 1,425,000. That is the total revenue. If this is the total revenue, then the next thing is the cost of revenue collection. Cost of revenue collection. Now, cost of revenue collection. Then if you go through the note 1, that 4% of that is Federal Inland Revenue Service is entitled to 4% of non-oil revenue. That is cost of revenue collection. That Olakoma Customs Service is entitled to 7% cost of collection on all revenue collected, while the Federal Inland Revenue Service is entitled to 4% of non-oil revenue. So the cost of collection is given to be 4%. So now you calculate 4% of that. So Federation Account Revenue Head, cost of collection. Federation Account Revenue Head, cost of collection is 4% of the 725,000. Then the value added tax. Revenue head cost of collection will be 4% of 700,000. Now, what is 7% of 725,000? 7% of 725,000, that is 29,000. 29,000. Then 4% of 725,000, that is 29,000. Why 4% of 700,000 will give us 28,000? 28,000. When you sum it up, you have 57,000. That is the cost of revenue collection. 57,000. So that is the solution to Roman figure 2. Roman figure 3 now. B. Okay, we have Roman figure 3. 13% derivation paid to oil producing states. 13% derivation paid to oil producing states. 13% derivation paid to oil producing states. If you go through the note, you were told note 3, 13% derivation is paid to oil producing states, and it's based on oil and gas related income. That means you calculate 13%. When you calculate oil and gas related income, you sum it up, you calculate 13% of it. That will be the amount of derivation paid to oil producing states. So now let's calculate the sum of oil and gas related income. Now let's go through the question. We want to identify the oil and gas related income. So number 1, we have crude oil sale. We have domestic oil receipts. It's an oil income. Miscellaneous oil receipts. Royalty on crude oil. Royalty on gas. Then we also have renters on oil field. We have gas fled. Then we have petroleum profit tax. Petroleum profit tax. These are oil and gas related income. So you sum them up. Now let's list them as we have them in the question. So we want to calculate 13% derivation paid to oil producing state. 13% derivation paid to oil producing states. Now, the oil and gas related income now, because you were told this will be based on oil and gas related income. The first one we have crude oil sale. Crude oil sale. And that is 350,000. 350,000. Then we also have domestic oil receipts. Domestic oil receipts. And that amounted to 445,000. 445,000. Then the third one is miscellaneous oil receipts. Miscellaneous oil receipts. Miscellaneous oil receipts. And that is 105,000. 105,000. Then we also have royalty on crude oil. Royalty on crude oil. Royalty on crude oil is 101,000. Then we also have royalty on gas. Royalty on gas. Royalty on gas, that is 95,000. Then we have renters on oil field. Renters on oil field. And that amounted to 87,000. Then we also have gas flood penalty. Gas flood penalty. And that amounted to 77,000. Then we also have petroleum profit tax. Petroleum profit tax. And that amounted to 650,000. 650,000. So those are oil and gas related revenue. So you now sum them up. What is the total of that? You have 1,910,000. 1,910,000. Now, the derivation paid to oil producing state now. Derivation paid to oil producing states now. And that will be 13% of 1,910,000. 13% of 1,910,000. And that will be 248,000. 248 million, because this is in million. 248 million 300,000. 248 300,000. That is the 13% derivation paid to oil producing states. Now, that is all about Roman figure 3. Then we have B. The B aspect of the question now. The B aspect of the question. You are to calculate the amount to be credited to 1. Consolidated revenue funds of Olakoma federal government. You want to calculate the amount credited to CRF. So before you can prepare the consolidated revenue funds of Olakoma federal government, you will need to prepare the federation accounts so that you will know the CRF share of the federation account revenue. So now let's have the Olakoma federal government. Olakoma federal government federation account for the year ended 31st December 22x. So all amounts in million. So now let's go through the question to find out those revenue that will go into the federation account. Crude oil sale will go into federation account. Domestic oil receipts, federation account. Miscellaneous oil receipts, federation account. Royalty on crude oil, federation account. Royalty on gas, federation account. Rents on oil field, federation account. Gas flood penalty, federation account. Petroleum profit tax, federation account. Companies income tax, federation account. Other non-oil taxes, federation account. Import duties, federation account. Export duties, federation account. Excise duties, federation account. Customs penalty charge, federation account. Custom fees account, federation account. Common external tariff levy, that is federation account. Then the court fees is CRF. So now let's write out all this revenue in our federation account. So we have the first item is crude oil sale. Crude oil sale, and we are given 350,000. 350,000. The second one is domestic oil receipts. Domestic oil receipts, and we are given 445,000 for that. 445,000. The third one, we are given miscellaneous oil receipts. I've told you that all oil income goes into federation account. Miscellaneous oil receipts. All oil and gas related income goes into federation account. We have 105,000. Then we also have royalty on crude oil. Royalty on crude oil, and we are given 101,000. Then we are also given royalty on gas. Royalty on gas, and we are given 95,000 for that. 95,000. Then we also have renters on oil field. Renters on oil field. Renters on oil field, and we are given 87,000. Then we also have gas flared penalty. Gas flared penalty. Gas flared penalty, and that is 77,000. Then we also have petroleum profit tax. Petroleum profit tax, and we are given petroleum profit tax of 650,000. 650,000. Then we also have companies income tax. Companies income tax, and that is given as 500,000. Then we also have other non-oil taxes. Other non-oil taxes, and that is given, other non-oil taxes is given to be 225,000. 225,000. Then we also have import duties. Import duties. Import duties, and that is given to be 255,000. Import duties is given. Import duties is given to be 255,000. 255,000. Then we also have export duties. Export duties, and that is given to be 125,000. 125,000. Then we also have excise duties. Excise duties, and that is given to be 320,000. 320,000. Then we also have custom penalty charge. Custom penalty charge of 115,000. Custom fees account. Custom fees account. That is given to be 120,000. Then we also have common external tariff levy. Common external tariff levy. And that is given to be 100,000. I've told you that the court fines, I've told you that we go into CRF, Consolidated Revenue Funds. The court fine is not a federation account revenue item. Then we also have payee of armed forces. Payee of armed forces is not federation account, it's CRF. There is 7% port levy. That is not federation account revenue item. The value added tax is not a federation account item. So now you sum up the revenue that goes into the federation account. You sum it up, everything. So when you sum it up, the total is 3,670,000. 3,670,000. That is the total revenue. Now, you now deduct the cost of collection. The cost of collection, you deduct it. You are going to less cost of collection. You know, you have that of Federal Revenue Service and Olakoma Custom Service. Cost of collection, now less cost of collection. So we have Olakoma Custom Service. Olakoma Custom Service. Cost of collection. If you look at the cost of collection, we got where in Olakoma Custom Service, we got 72,450. The 72,450 is the cost of collection relating to the revenue from federation account. While 1,750 relates to the CRF. So that will not be charged against the federation. So we only consider 72,450. 72,450. Then we also have the Federal Inland Revenue Service. Federal Inland Revenue Service. Cost of revenue collection. Federal Inland Revenue Service. Cost of revenue collection. So the one that relates to federation account, we got 29,000. Why the remaining 20,000 relates to value added tax? So we have 29,000 relating to federation account. Then we also have 13% derivation paid to oil producing states. 13% derivation paid to oil producing states. We got 248,300. 248,300. When you sum it up, The total will be 349,750. 349,750. You now subtract that from the figure above. When you subtract 349,750 from 3,670,000, then you'll be left with 3,320,000. 3,320,000. 250. This is the income, net income for distribution. Net income for distribution. This income will now be shared using the appropriate rate. You share it between the federal government, state government, and the local government. So you have to share it in note 2. You have been given the sharing ratio. The sharing formula for the federation account and VAT is as follows. So the federal government will take 52.68% of federation account, state is 26.72%, and the local government 20.60%. So now let's share it. So between federal, state, and the local. So federal government, that is 52.68%, 52.68%, 52.68% of 3,320,250, and for state 26.72%, 26.72% of 3,320,250, and the local government, that is 20.6%, 20.6% of 3,320,250. So when you share that, so the federal government receives 1,749,107.70. The state government receives 170.80. While the local government receives 683,971.50. When you sum it up, the total will be 3320250. So that is the share of the federation account revenue. Now we can prepare the consolidated revenue funds of Olakuma federal government as required. The federation account and the consolidated revenue of Olakuma federal government. Having prepared the federation account, Olakuma federal government, we have prepared the federation account. Now the next thing is the consolidated revenue of Olakuma federal government. So that is the next thing. Calculation of, that is B. Calculation of the amount credited to. Calculation of the amount credited to. 1. The first one is Olakoma Consolidated Revenue Funds. 1. Olakoma Federal Government Consolidated Revenue Funds. So, the figures are in million. The first thing is share of the Federation account revenue held. Share of Federation account. Share of the Federation account. The federal government share of the Federation account is 1,749,107.70. So now let's have share of Federation account. Share of Federation account, and that is 1,749,107.7. Then the other revenue that are exclusively for the Federation account, I mean CRF. What are other revenue that will go into CRF? We have the court fees of 30,000. That is federal government revenue. So now let's include that. Court fees of 30,000. Court fees of 30,000. Aside the court fees, what are other revenue that will go into CRF? Other revenue that goes into Consolidated Revenue Funds. So we have pay of armed forces, that is 55,000. Pay of the armed forces. Pay of armed forces, that is 55,000. Then we have the port, 7% port levy, that is Federation account. Port levy is Federation account. Value added tax, that is, you are going to share between the federal, state, and the local government using this ratio. Federal government 15%, state, and the local governments. Now, let's prepare the value added tax account so that we'll be able to distribute the VAT income. So, value added tax account, value added tax account for the year ended December 22X, that is Olakoma Federation. The value added tax, Olakoma federal government, the value added tax account. So now the income from VAT is given. We have value added tax. The revenue from VAT is 700,000. The VAT revenue is 700,000. VAT revenue, that is 700,000. Then you learn less cost of revenue collection, less cost of collection. You know, the federal land revenue, 4% cost of collection. The cost of collection of VAT, that is 4%. You know, it was collected by the Federal Inland Revenue Service of Olakuma. So if you calculate 4% of that 700,000, we got, that will give you 28,000. To give you 28,000. So if you now less 28,000, if you subtract 28,000 from 700,000, so this is 28,000. If you subtract it from 700,000, then you have 72,000. This 72,000 will be distributed. Let me say distributable amount. This is the amount of VAT that will be distributed between the federal, the state, and the local government. So the federal government share of VAT, state government share of VAT, and local government share of VAT. And you have been told to share the VAT 15% to federal government, state government 50%, and local government 35%. 15, 50, 35. So we have 15% of 672,000. Then 50% of 672,000, and 35% of 672,000. So the federal government share of the value added tax is 100,800. 100,800. The state government share of VAT is 336,000. 336,000. And the local government share of VAT is 235,200. 235,200. The total will be 672,000. So that is VAT. So the federal government share of VAT now, VAT that will be credited to Olakoma state government value added is 100,800. 100,800. 100,000 value added tax. Value added tax. Value added tax, and that is 100,800. 100,800. So when you sum it up, so the total will be 1,749,107.7 plus 100,830,000 and the 55. The total is 1,934,907. 1,934,000. 1,934,907.7. That is CRF. So, because of our time and because the weather has changed, if you look at the quality of the recording is reducing, so I may not be able to consider the Roman figure 2 and the Roman figure 3 aspect of the question in this video. A border state consolidated revenue funds account and state joint government account. So those one will be considered in another lectures. Thanks. If you have not subscribed, please don't forget to click on the red subscribe button. Thanks.